Hey, it's Shelly Borman here, your favorite home loan strategist. And today I want to talk to you about a win-win strategy for all parties when you're looking at buying or selling a home. If your lender is not talking to you about the seller buy down strategy, then call me today before you put an offer in on a home, or call me today before you accept or sign the contract that you've just received on your home. Let me take a few minutes to show you specifically how this seller buy down strategy works and why this is beneficial to you as a buyer or as a seller. So let's take a look at this. Let's say that you're interested in buying a home that's listed at 500,000. You're going to put 5% down. Interest rate based on where rates are at today, 5.5%. That equates to an estimated monthly payment, including taxes, insurance, mortgage insurance, that sort of thing, of about $3,083 per month. And you can see that the cash to close is about $31,000. As a buyer, you think, you know what? I don't really like that monthly payment. I want a lower monthly payment. I'm going to offer $10,000 less. House has been sitting there for a while. I'm going to offer less. So now you're offering a purchase price of $490,000. Nothing has changed with the interest rate, still 5.5%. And you can see that at that lower loan amount, it changes your monthly payment about $55 per month. Your cash to close is a little bit less because of the lower purchase price, but it's negligible. There is a better option. As a seller, there is a better option instead of dropping your purchase price, and I'm going to show you that now. This is the seller buy down. Purchase price and loan amount are going to stay the same for a buyer. But now the seller is going to offer a seller credit. Instead of a $10,000 price reduction, the seller is going to offer $8,300 towards the buyer's closing costs and prepaids. And all of those funds, or almost all of those funds, are going to be used to buy down the interest rate to a lower rate. So now, instead of a 5.5% interest rate, you can see that that interest rate is now 4.875%, paying 1.75 discount points. Look what that does to my monthly payment. It drops my monthly payment, not $55, not $100. It drops the monthly payment $183 per month. Cash to close stays the same mostly, right? Because all of that seller credit is going to buy down the interest rate. We are paying so much less in interest with this program. So this is a huge win. It's a win for the buyer, lower monthly payment, significantly lower monthly payment. It's a win for the seller too. Instead of dropping the purchase price $10,000, he's given a credit of $8,300. To get that same effect from the monthly payment on a buyer's perspective, the purchase price would have to be $33,000 lower to drop the monthly payment $183 per month. But I want to take this a step further and show you why the seller buy down is actually better over the long run than even a $33,000 price reduction. Let's say the buyer is going to keep this loan for 5 years. You can see that the savings from paying lower interest over the next 5 years is almost $15,000 when compared to the first column. So that's a $500,000 purchase price, no seller credit, all of that stuff. But you can look at it over any amount of time, over 36 months, almost a $9,000 savings, still better than the savings with a $33,000 price reduction. Over 1 year, it's almost $3,000 better. So clearly, this is an outside of the box strategy that everyone should be using if you as the buyer are looking at putting an offer in on a home under ask price, or if you as a seller are thinking about dropping your purchase price to get more movement on it. Now, of course, with any mortgage loan strategy, there are some key pieces that must be met in order for this strategy to work optimally. One, it's critical that the home appraise for the agreed upon purchase price. This strategy is not going to work if the home is overpriced. If that does happen, then there's some renegotiations that must happen in order for this to work out. And the second piece is this strategy is not going to be an option if the buyer is using a down payment assistance program or other program where there's a fixed interest rate and the rate is not able to be bought down. Now, certainly a seller credit can still help a lot of buyers in that situation, but it would be using a different strategy and not this seller buy down strategy. So if you're looking to buy or sell a home in Colorado or Wyoming, and you want to see how this specific strategy will work for you, call me today. I would love to walk through the information with you and show you exactly how this is a benefit to you. I'm Shelly Borman with Loan Depot. You can reach me at 970-481-3340. I look forward to talking to you soon.